Welcome everybody to the webinar. It's great to see so many familiar faces here. This is great. And I really um, am sorry for those of you that are watching the recording because you weren't able to get in. It looked like we were going to have a full sellout today for this free webinar, and we do. And I'm really excited to have Greg here, Greg Ward from the Forex Room, theforexroom.com. Uh, Greg has been trading for 5 years. He has an excellent short-term trading or scalping trading system. He's going to show you exactly how he does it. Now, if you're interested in the way that Greg trades, of course, you can find out more from theforexroom.com, and that's where you'll find Greg, in fact, every day. I have to warn you, though, I have been told that Greg can sometimes tell it like it is, and that may be that may be sometimes a little bit too much for people. So if you are, if sometimes someone who is really blunt is a little bit concerning for you, then maybe close your ears. But otherwise, I'm really excited to have Greg here because he's an excellent trader and he's going to show us something really cool. So, Greg, take it away, and I'm looking forward to seeing what we have here. Great, thank you.
All right, here we go. And I'd like to thank Walter. He is a person I very much respect. And all I can say is my trading has gotten to where it is because of people like Walter and Colin Jessup, who I'm going to throw up out there.
A lot of you know me as Rob from the Daily Trader too.
Oops. I flubbed that one right out the gate. So anyway, Colin and I have been working together, and it's really been a thrill and an honor for me to do so. What I have up here is Colin's work in progress, plus I balled it up with that little window down at the bottom. That's just for me to help double check. But Colin is working on a system also that really, really looks great, and I'm excited for that when he releases it. Now, as far as short-term trading, in this room, I was telling Colin I feel a little intimidated because all of you are looking at nice, clean charts, and brace yourself because I'm about to throw what I normally look at. I call them my seizure charts because they do cause seizures to people, and people look at it initially and go, what the? So, and I can't blame them because you look at that, and I'll throw up trend lines on this thing and everything else to get it going. I cut my teeth on indicators, so I just developed looking mainly at what's going on through the RSI, a stochastic, a MACD, and certain moving averages that come up, and a Fibonacci. You guys, when you start out, go through the time frames and just cut it down, and then when you get to the time frame you like dealing with, put a governing Fibonacci on it, one that you look at it and that thing is pinging the levels like clockwork. And when you do that, generally speaking, you come out golden. Now,
hey Greg, why don't you start with just start with explaining, what's the first thing you're looking for?
The first thing I'm looking for is I follow the price action, and then I look down and I see where in relation to the moving average my candlesticks are. Like right now, for example, we've got the Aussie, and I've been hanging on to this one. I'm waiting for it to get up here. This one's been a booger. It's taken some time, hasn't come against a stopping point, and now it's pretty darn close to my goal right here. But I looking at this right here, I'm going, what's going to happen you know, on this thing, if we can clear this point, this is kind of the magic point right here. Then I look for a price level to go from to here, the first extension, the second extension. Now what I have up here also are pivot points. And I look and I go, son of a gun, if this second extension hasn't gone right up to the R1, that's looking pretty good for, you know, price action to go up to that point. So if I made a call, I'd say, okay, let's take this thing, you know, in this area and then ride it up to, I'd say we'll take profit at 0530, okay?
So
and
what exactly would, like, first of all, where are you drawing your fibos from to determine your targets, and what are the moving averages that you use?
Okay, as far as the fibos go, I'm looking at these. I'll close this window here, or I'll get it out of the way and explain that later. On the fibos, I'll take those and I'll look at a longer term one, and then I'll look at an immediate fibo on what's going on. And generally I'll use the 1 hour chart to do so. And I like doing, on the short term, I like using the 1 hour, because when it actually does break a level, you're looking at more potential pips coming down the line, say, than you do a 5 or a 15-minute chart. So there was a gentleman in our room that was there, and he dealt mainly with the 5-minute charts, and the guy was phenomenal. He was working off an Elliott wave theory, and he's got that one nailed and better explained than most I've seen around. But I digress. Anyway, the fibos, like I say, I'll take a longer term one, see how it's reacting to that, and then I'll see.
So your longer term one would be on the big move up, right? That you can see on the chart there. And then your shorter term one would be on that pullback sort of thing.
Correct.
Okay.
Correct.
One of the questions we've got so far is, can you explain the MS1 and MR1 pivots?
Okay, that is based, okay, those are midpoint between the actual pivot that's there.
So it's the midpoint between the pivot and the R1 then?
That's correct. Correct.
Okay.
So,
and what are the indicators that you have at the bottom of your screen?
The indicators are the bottom with, I have a MACD set with certain parameters. You can see 5, 13, and 1. And all that does basically is tell me what the moving averages of the 5 and the 13 are doing. And when they cross, there's a zero line down here. And when it crosses the zero line, you have a moving average cross. And then I couple that with, this is my stochastic. So I look for the crosses down in the extremes on that to see how it'll do, how it will carry up. And in essence, I look at a wave type pattern as this goes along. And I stick mainly with the three waves, three goes at a level. You know, I work in threes mainly. I look at it, and it's just a quick way for me to see how if there's a chance of it breaking that level one way or another, if it's going to destroy my trade or not, or take it to success.
So we have a question. When you're using the fibos, you drawing them to the bodies or to the highs and the lows?
I hate to say this, but I do it to both.
Okay. Now,
I do this on the longer term. I draw it to the bodies only. I look at the wicks. I've got a terrible taste in my mouth for brokers, so I look at these things as far as as going after stops, doing stop hunting and that, or giving a false breakout. So
Right.
and then on this, I went with the actual wick to wick on this, the actual high to the actual low.
So do you have a chart? Do you have anything setting up that you could just show us, you know, a potential trade, or can you just, how about, could you, you know, tell us, you know, step by step what you're looking for to get into a trade?
Okay, right now we can take the Aussie because it's so close. Like I was saying on this one, I'm looking at it breaking breaking this level, but before it does, we've moved away, our moving averages have moved away from this, or I should say our candles have
price has moved away from the moving average.
That's correct, and there's a big gap here. So this thing is either going to, you know, take right off, but I fully expect it to come down to this area right here because of we have a downward type RSI, all right? That thing's pointing down, but yet these indicators here are showing that we still have some up movement. So I'm thinking, okay, well, this may be good for, you know, like a limit order, a buy limit down in this area right here.
So you would look at that and you would place your a buy at the 23.6 level. Is that roughly what you're looking at?
Roughly, because my moving average is there. Okay? That's what makes it another good thing to place it in that area, because I have a moving average right at a fibble line, and then I get all excited there too. I go, whoo, this is looking pretty good for correlation. So I set my cursor on the candle, and then I look at that data window, and it's telling me that the 5 moving average is at 0496. All right, so I'm going, that's a pretty good place to set my limit order right there.
So you put a buy limit at 0496.
That's correct.
Okay.
That's correct.
And where would you put a stop then?
I would put a stop at that point down below this level, right? This moving average, my 13. Although I don't think it'll go that far, but I do that just for protective purposes. Let's see. So we've got our 13 at 0490, and let's see, we've got, let's see where my 21 is here, 0485. I'd go with a 0489 as far as the stop on this.
Okay. So basically what you're doing is you're looking for an entry on a pullback, and you're using the moving averages to determine where that entry is.
Correct. And where the stop is. All right.
Okay. Okay, so why don't we do this? Why don't we see if anyone has any questions, and then we'll move on from there.
Yeah, I love questions. Throw them out there. I know this said a simple method. It's simple to me because I'm used to using it. When a person first comes in and they're used to a different trading style, it's kind of jumbled. So when we get going in the room, you know, I try to explain what I'm doing, why I'm doing it, and go from that point.
And the room that Greg is talking about is the Forex room, which Greg and I moderate along with one other trader.
Yes, and that's a shameless plug for us, so good work, Colin. So anyway, to move on, what I'd also do is as this thing moves down, I would put a a buy stop, 1 pip above this wick right here, with the stop loss in the same position.
So if your buy limit order didn't get, if your buy limit order wasn't triggered, then you would have you would not miss the trade because your buy limit wasn't triggered. You would still get into it if it broke the high.
Correct. Correct.
I
And
do
then
have
my profit targets. Go ahead.
Sorry, I do have some questions here. Sorry. When you finish your profit targets, I've got some questions here for you. Okay.
Sure, good. Okay, my first target would be at this level right here, the first Fibo extension, which is at 0521.
So that's a 38.2 Fibo extension?
That's correct.
Okay.
And my second target would be at the 61.8 extension, which is 0530. Now it may go a lot further than this. Like I say, I check my indicators at that point to see what may happen at that point. So go ahead and fire away with the questions, Walter.
Okay, we have a few. Is it possible to move the data window to the left a little bit so we can see just more of the far right? Yeah, thank you. Yeah, that's great.
Is it ever possible? Yes.
So we have got lots of questions here. Greg W. asks, why are there so many moving averages? So what's the function of the moving averages?
Okay, for me, they're okay. If it gets past this point, it's going to go to another. What's the next point it's going to go to? All right, and this moving average, the 21 right here, that one, if price action is above it, I can be looking for trades, long trades, as long as the price action stays above.
So you're using the 21 as your to determine whether you're long or short, looking for longs or shorts.
Correct.
Okay.
And I use these two moving averages right here at more or less to say what the general trend is doing. And everything's above here. Price action's above. The moving averages are above. So I'm looking at this point for long trades. And we've got nice angles. I look for the angles on the moving averages. And separation between the two. This I look at, once you start dealing with that, the moving averages, you look and go, what's the possibility of a pullback and how far will it be? And that's why I use the moving averages, coupled along with the Fibonacci ratios, they're dynamite. And this 88.6, and I think one of the names mentioned here that is gaining notoriety. And Walter, who's the person that you said that is pulled out of doing webinars and jumping back in now?
Roberto was doing it, I think, back in 2004 and 2005, but he's now doing them again. Yeah.
Right. Now, it may be Roberto that came up with this 88 point or 86.
No,
it wasn't.
No, that was another gentleman.
Oh, I was going to say I was ready to kiss Roberto for that one, because that was excellent point, and I saw this more often than not, especially on the pound, that it would hit this level right here, and then just, if it couldn't get by, it was headed back up. All right. So there are certain levels you look at that are reverse levels on pairs, and this one holds true for most all the pairs right here. If it can't get by it, that puppy's going back up. On the other hand, if it closes below, I start looking for shorts, in this particular case anyway. So With that said, more questions, and I hope I answered the other one.
Yeah, so they're wondering where, where did you, are these moving averages simple, exponential, weighted, and where, where did you come
Oh,
up
okay.
with the number? Yeah.
Okay. What I have is this is a 156, which a lot of people will use a 200 exponential. All right. I use this in the same way a lot of people use a 200 moving average. This is my moving average 62, or which reverts back to the golden ratio here. This I use, a lot of people will use a 50, and this also is an exponential moving average right here, the 62. When I'm talking to somebody and they say, hey, look out, we've got the 50 there, and I'll go, yeah, I've got my 62 is saying much the same thing. So it's much similar to a 50 moving average. Now we go up to the 21, all right? The 21 moving average is the only simple moving average that I use, okay? The 21 is simple. And then we've got the 5 and the 13. The 13's this, the 5 is this one right here. They are both exponential. Now, this right here is a linear regression. I look at this, a linear regression, I look at that as it's more or less giving me a view of a W or an M per se, and that goes along with what a lot of traders use as far as what they like to see, W's and M's to ping the bottoms, what it might be doing, go to the midpoint and then retrace. Like I look at this as kind of a, right here, I look at this as a type of W right here. It came on down, formed the bottom, here's your midpoint, retraced, and now it's coming back up. Now, at this point, I'm going, yeah, okay, it's looking like a good W that if it breaks this point, it's going to send it, up further. And
to your target.
Right.
That's a
and
great,
if we look at the,
sorry, that's a great
go
point,
ahead.
what you just said, Greg. And Martin has a great question. And he basically is asking, why are you so confident that price is going to break this level here? Like, what is it about this chart that says, you know what, my target should be beyond where price has recently reversed?
Right. And that is why, okay? And another thing right here is we're reaching the extremes on my RSI. And for extremes on that, I use an 89%. So if I put my little cursor back up here, I look over at that data window, I see that my RSI is at 82, all right? And I'm looking for an 89 off of that thing. And what happens many times when it takes such a struggle to get this point, this will mash that RSI right up on top and keep it there for a while. Do something similar to this, only just, oh, here we go. Here's an example on the low side of where it came down, and right here, my magic percentile is down at 11%, all right? I'm looking for things to cross into that. That would be the real extreme. And you can see it hit, and then it just really dove and held it. We take our cursor, we go back over to where it first hit, would be this candle right here. And then it just continued to go on down. I mean, it just mashed it. And what I'd be watching, okay, go ahead, Colin.
So even though it was, your RSI was relatively extended, what it was saying to you is that there was more room in it. And right now with the Aussie, that's why you feel that it's going to break this high, correct?
Correct. And another thing I look at that makes me feel warm and fuzzy inside is I look down at the MACD. In that MACD, the signal lines they're just getting longer and longer, okay? Had at this point right here where this thing bottomed out, okay, if you look at the signal line, once again I go for the magic cursor here, if you look at the signal line right here, we're still at a good angle going down. So I watch this too. I mean, it's a combination of indicators that I look at that it gives me a feeling, more positive feeling to take that trade, get in there, and more than that is I've got a room, I've got a responsibility of making decent calls. So I look at it and I go, yeah, this one really looks like it can do it, and I'll make a call at that point where I feel secure. Go ahead, Colin.
No, I was just going to say that, regardless of calls for the live room, like obviously when Greg is calling trades in the live room, Greg's average is somewhere around 90 pips a day, and so even though the system kind of looks a little bit complicated, it's actually, once you follow along for a little while, it's actually fairly simple to grasp. And I guess what the bottom line is that when traders are looking for a method, everybody is looking for something a little bit different. And in this case, this is what Greg has found time and time again works for him.
And that's the key right there. It works for me. I'm comfortable with it. In the room, our goal is to get you comfortable with whatever style you're in. You may elect to trade like I do. Most of the people in the room trade along with Colin style, the longer term, more so geared towards the candlestick patterns or naked chart trading. And it boils down to, is what you're comfortable in doing. And if I can help refine somebody's trading, that's what I'm here for. The thing is, again, this is what suits my personality. It suits the way of trading. Walter, being a psychologist, to go, yeah, well, okay, maybe I can buy that, but it works.
Right.
All right.
And basically, what it really comes down to, it's all about price action, and Greg is just looking at how is price reacting to those moving averages.
Thank you, Colin. I could have ended up that whole diatribe with just that. Sorry, guys. Go ahead.
Yeah. Oh, yeah.
Are there any other questions, Walter?
Oh, we have tons. I mean, just depending on how much time you have. Basically, so you basically said you already talked about the moving averages. Some of them are simple, and some of them are exponential. And then that yellow one that hugs price is the regression. Are those standard settings on that TMFX MA2 thing, the regression? Are those like standard settings, or are those changed or something?
They're a little bit tweaked on
Right.
that. That's something I picked up earlier on, and that I held on to because I saw the merit in it. I'll have to give the person credit for this, would be a gentleman by the name of Eric Duran, who I feel is an excellent trader that has kind of stepped out for a while. But he and I were working on developing something that we could see to get into a trade. And I took it and molded it into my style of trading and what I'm looking for. And we've gone from there. But as far as the other indicators, they're just standard. That linear regression's the only one that that is different, and that, like I said, just helps me see, you know, the bottoms, the midpoints, like that, retracements, and on up. It clarifies for me some of the things. Sometimes I'll get up and I'll step back and I'll look at my screen from a distance and try and, you know, pick up a pattern, look at something that I, you know, may have missed by being, you know, so close on it and possibly myopic. But this this thing is, and we're soon going to find out what happens when this breaks this top point. So,
Okay. So next question maybe?
heck yes, throw it out there.
Okay, what about, sorry, we've got some renovations going on. This is going to be interesting. About position sizing. What about position sizing? There's questions about your position sizing and also your stops. Those are two that are coming up.
Okay. Once again, I look down, and that's based upon price action with the moving averages. You can see that that 5 moving average is coming up. All right, so the chance of this coming down and hitting the hitting the limit grows further and further away. The sizing on it, once again, I try not to have too much of a stop loss, because I like the idea of 1-to-1, 2-to-1, 3-to-1 type thing, and that's when we get into trades. Colin and I both go, okay, if you feel you'd like to exit a position at 1-to-1, 2-to-1, or whatever before it hits the target, you know, fine and dandy, you know.
But so as far as setting your stop, you're looking to enter at the 5 moving average, and your stop is placed at the 13 moving average. Is that correct?
That's correct. Just okay. A pip or two below, I try and see, because I've seen it stretch, you know, and
and then as far as the position sizing question goes, I know it differs from trader to trader, but Greg will often, like, he'll basically start the trade with 1% risk, and as the trade progresses, quite often he'll add positions. He'll pancake, as we call it, to his target. So, you know, at the maximum, he'll have up to 5% on any one trade.
Yeah, and watch my rear end tighten, but it generally hits target, so it isn't too bad, you know.
Yeah, very high win ratio.
Yeah.
There's another question that I see. On average, how many trades per day do you take to reach your goal?
Between 5 and 10 on that.
So you're generally looking for, you know, 10 to 15 pips on each trade. Is that right?
That's correct.
Okay.
And I'm not adverse, if it's really hauling buns there, to follow. What I'll do is follow it. You know, click, 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 and the broker I'm with, fortunately, lets me get within 1/10 of a pip and pop it. And some of you may laugh, 1/10 of a pip, but what if it keeps going? At that point, when I start following, I'm happy for every little extra. So I will do that. If I see the steam running out of the trade, then I start following it ferociously, and then I'll look for a retracement to enter that trade again.
Okay. Do you trade the Asian session with this system?
I trade all of them. It's just that your time's going to, Okay, what you have to look at is what pairs you're trading also on that. There are certain pairs that just perform better, during the different sessions. So I try and pick those out and ride with those. Although the Euro USD and the Pound USD tend to move fairly decently during the Asian sessions.
Yeah. Okay. Do you consider any other time frames for your directional bias, or support and resistance areas? And if you do, how does it influence your entries or exits? Or do you basically just look at your indicators for the most part?
I look at the indicators for the most part. I love the Fibos. I just follow that because that's telling me what price action's doing. And if, like I say, if you've got a good Fibo, man, that's it. And I look for certain levels of that Fibo, being pinged on.
Okay.
So.
And the stops, the question about the stops, Greg will put basically the stop, where he places a stop is he uses a 13 moving average and places the stop a few pips behind wherever the 13 is.
And okay, Colin, I'll have to qualify that. Some, such as the pound will like to retrace to the 13. All right. So when I get to the pound and the EJ, I will go a little bit deeper, as far as the stops go. So I want price action to be close, close to the entry point that I get into. Right. So that's when I wait for the limit orders. I'll wait for a retracement to make it so that those 1-to-1, 2-to-1 goals are met. Uh-oh.
Our friend Ashley is here, and he just asked a funny question.
Oh, dear. I wish everybody could meet Ashley and talk with him, because be ready to get your face torn off when you're speaking with him. Although he is the world's kindest person, so.
Okay. What indicators are being used at the bottom, and do you use the standard settings? I think we did cover that earlier, but basically Greg's got an RSI 3, which is the blue indicator, and then you've got a MACD and a stochastic combined in the bottom window. Is that correct, Greg?
That's correct. And once again, my MACD is 5, 13, and 1, and the stochastic is 8, 5, and 5.
Okay. And your the 5 moving average. The 5 moving average. There's a question, what's it used for? But basically, that's where Greg, if you were to looking to enter on a buy limit, that's roughly where he would place the entry.
Yeah, and okay. If you look at this thing, and this right now is just riding the 5. You can see that it likes to stay in fairly close contact with it. You can see it got away at this point, came back down to meet it, and then really got away from it here, then came back, and it went a little further. Now here's the point where you look, is this thing actually at this point going to carry with a reversal or a deeper retracement? But it came down this 38.2 level. On this others, it came down, hit it, didn't want to go past it really. At this point it did. I think that was just to yank somebody's toes off and then take it up into the ozone right there. They probably felt like, this thing's going back to the 50. I think I'll take it. Whoops, there went my face. So anyway.
Okay, so there was another, someone was asking if it was a live, and Greg is actually in a live trade. I think your first position is up 6.9 pips. Is that right, Greg?
Yes, you can read it up. Here, my first position is up 13. My second one's up 6.
Right.
At the present time. So.
And you're looking for a potential break of the high to add another position.
Mm-hmm.
Okay. Okay, Walter, I'm not, if there's any other questions that I can't see.
Hey, how about does Greg take when his moving averages cross on the price action chart?
So the question is, would Greg enter a trade if we saw a cross of the moving averages?
Sometimes. It all depends, Walter. If it's going in the direction of the trend, heck yes, I'll take it at that point. And there was a fellow trader that I worked with for a long time that found a way to put a Fibonacci on an EMA cross where he could figure out the extension on where that darn thing was going to go. And I'll say that he with that extension, it hits that thing, I'd say at least 90% of the time. And so what you do, go ahead.
So you would enter on a cross if it was at a key Fibble level then?
Yeah, yeah. And those crosses are pretty good for the most part, but you have to make sure that, there's certain other things you should look at. I'm going to mute myself for that.
Okay. The win rate for this strategy is quite high. I'll wait for Greg to get back for him to answer that, but he's got about an 80% win rate. He typically sticks to the 1 hour chart, but he'll often use the 1 hour as his parent chart and then hone his entry off the 15-minute.
And yeah, that's pretty much it. And I think we all do that. We'll go on a larger, I can't say we all do that, but when you're making a trade, if you look at the longer term, see where you are in the smaller one, and that'll give you an indication of where you might get into it. You can look at the price action on the smaller one, see if it does have room to go. So, okay. Like every day I will go through and I'll start at the monthly and I'll work my way down to the hourly. And what I look for on that is my general trend, my daily trend. I'll look at what the stochastic RSI is doing, and I'll look at the percentages. I'll get price points on that, and that'll give me price targets down the line on what I'm looking for. All I can recommend to all of you is do your homework on this, really, because if you do that and you've got something that you can look at, I mean, like if I was telling Colin yesterday, I'll wake up and I'll see this candle pattern and I'll go jump in it and I'll ping either the top or the bottom that I don't want to ping on that. And had I just looked down at my notes at the time, to get into it, that there wouldn't have been a problem. The entry wouldn't have been made. I would have waited for a different entry point.
So basically what you're saying is the higher time frames are important, but you trade mostly off of the 1 hour.
That's correct.
Okay.
That's correct. They're very important, just to give you a feel of what the price action is doing overall.
Right. Okay. Are there any other questions, Walter?
I don't see any here. I think you guys have pretty much covered them. A lot of questions about, the entries and the stops and the position sizing. There was a question about, it doesn't seem like that's a lot if you're only up 12 pips or 6 pips, but obviously when you're trading with such a tight stop, you can afford to take a large position. So it is actually a significant profit, isn't it?
Yes.
Yes.
Yeah, very much.
Very much so.
Yeah, it's all relative. If you have a $10,000 account, for example, and you take 1 or 2% of your account and put it on a 50 pip stop, you know how what your lot size is going to be like, right? You take the same account and you add 1 or 2% with only a 9 or a 10 pip stop, and you're going to be trading considerably more contracts than you would be with a 50 pip stop. So Greg basically, he takes about 90 pips a day out of the market in small increments, 10, 12, 15 pips at a time. But his drawdown is very low because of it. If he does get stopped out, occasionally it's quite easy to make it back. How about profit taking? What percentage would Greg typically take out at the first take profit? From my experience with Greg, and Greg can tell me if I'm wrong, but Greg basically typically only has one profit target. He'll look for, but what he'll do is he'll add to his position as it gets closer and closer to that target.
You nailed it on that one.
Okay.
Okay, great.
Are
Thanks
there
so
any
much.
other questions, guys?
Yeah, thanks so much for your time.
Yeah.
Any more questions?
Okay. So if anyone wants to, if you're interested in observing, Greg's method a little bit more, we offer a 1 week free trial. You can come in and follow Greg and myself and Tim, who's another trader who's part of the Forex room. You guys can come and check us out for a full week. If you're not satisfied, then we are more than happy to refund your sign-up fee. But we got a really excellent track record. I'm not sure, Greg. Do you have that PDF that we were using?
Okay, yes,
yeah.
I've got it hidden somewhere. I'll bring that up right now. Just a second.
We've been working together now. We've had the room running live for roughly 9 weeks, I believe, and in the last 8 weeks, between Greg, myself, and Tim, we're averaging between 100 and 300 pips per week, like clockwork, and we've only actually had 1 week where we had a drawdown of minus 60 pips. So between Greg's methods, my methods, and our other guys' methods, there's a little something for everybody in the live trading room. And we cover both the London and the New York session. We usually do about the first 2 to 3 hours of London and the first 2 to 3 hours of the New York session as well.
Okay, here's some more shameless advertising, people. Boom, here it is.
Sorry. No Asian session. No, we don't actually trade the Asian session, and basically the reason for that is that, number one, we have to sleep at some point, and number two is just the volume is typically lower during the Asian market. So as far as an official room, we just feel it's better for our members to trade the higher volume sessions like London and New York.
So there you have that little thing. Let's see what else this PDF has for us. Oh, there we go. I didn't do this, guys. Somebody drew it up for me. That is shameless right there.
Is Greg in the room during the London session? Yes, he is. Yeah, Greg is in during London and New York. Both Greg and I are there during the New York. Greg lies. Greg doesn't sleep. Well,
Ashley is out there. I know.
Yeah. What does 100 to 300 pips per week mean in average % returns on the account? Well, that really varies. It depends on the trades from that week, But on average, most of the, usually a maximum stop for us is around 40 pips, and that would be something that I would call. So it really depends on how big your stops are, how big your and how much you're risking on each trade. But I think I could safely say that you'd be looking at anywhere from 5 to 25% per week, depending on your risk factor. I think that's all the questions I could see.
Okay, thanks so much, guys, for spending time here, and thank you everyone who made it to the webinar today. I know a lot of people are watching the recording, and I'm sorry you weren't able to make it. But thanks so much, Greg, and thank you, Rob, for your time today.
Hey, thanks for having us, Walter. And as always, we appreciate everything you do.
Ditto what Colin said. Rob. Excuse me.
And I saw a question earlier about my thoughts on the Aussie yen trade. I will be uploading a video to the Daily Trader shortly.
Thanks so much. That's great. Yeah.
Yeah, Walter, be sure and send me a way that I can contact you and further torture your life. I'd appreciate it.
I will.
I'll take care of that.
Thank you, Colin.
Okay, Walter, as always, a pleasure. Thanks very much for having us.
Thank you, everybody, for your time, and thank you, Colin/Rob and Greg. Have a good one.
Okay. Thanks, everybody.
Okay.
Thanks. Take care.
I'm sending out the recording, guys, so you'll get the recording. Okay. Bye, guys.
Okay.
Bye.
Bye.